Hey there, in this video we're going to dive into the market stats and give you some insights on what to expect with the Tucson real estate market as we move through the summer here. It's Steve Dooley. Hey, it's Steve here, and right now I just want to dive into the stats with you really quickly, and of course we're going to give you some insights and some things and tips on what to expect with the real estate market so you can make educated moving decisions. So first of all, we're going to look at the number of new listings. And the next three stats all kind of correlate because they all are about, the inventory here in Tucson. And this is the entire Tucson MLS, all these stats from, as you can see with the new listings, we're down 19.3%, which just to show you the trend on that is that's been happening. We've been dropping inventory, okay, since like the end of 2022, right? August 2022, even though July of 2022 is when the Fed actually jacked the rates up from the threes and up into the sixes. So even though we've still been selling houses since then, and we have not had a lot of new listings coming on the market. So the number of new listings has been dropping steadily since then. So let's switch over to the inventory. So here is our current inventory, the number of homes for sale. But so new listings have slowed, so the market's slowed down. However, we are still increasing in inventory, by quite a bit, 41% since last year, this time in July. So again, when they dropped the rates, everything happened. It slowed the market down, which is what they wanted, and we've had a lot more inventory coming onto the market. So there's a lot more homes for buyers to choose from right now. And there's going to be a little bit more competition when you're selling your home. So just throwing it out there and not doing any deferred maintenance probably is not going to fly as much as it did in the last 2 years. So homes for sale, showing that trend as well. It did dip a little bit last month, but we were on the rise quite a bit. And it's leveled off in May, June, and July. It's kind of dipped. So we were up at 33, almost 3,400 total homes, but now we're at 33, so dipped a little, but not much. Looking at closed sales, so these are actually number of homes actually sold, and again, that's down 25%. And all of these three things, new listings, homes for sale, closed sales, all down, that's just indicating that there's a total overall slowdown in the market. So the whole market is slowing down, has slowed down. And that's what the Fed wanted. That was the intention of raising the rates, is to kind of curb some of that inflation, slow things down a little bit. And of course, the ones that correlate with that is these two here, days on market and months supply. So days on market says 157% increase since this time last year. And if you recall, we are in kind of a pivotal month here in the Tucson market, because in July last year is when they jacked the rates up in the first place. So back then, we were sitting at super low days on market. And of course, this is across the entire MLS. But as you can see here, if we're looking back into July, right in here, the days on market were like sitting at about 6, right? And that's on average. So there's a lot of houses that were going on for sale in one day. And then there were some sitting like a couple weeks, but the average was 6. So when you're looking at that statistic, you got to bear that in mind. However, that has been steadily increasing, the days on market. Also, month supply. Month supply has kind of leveled out last couple months. We're sitting at 2.2 months, which is still, all these are indicating very much a seller's market, because there is still an overall shortage of inventory here in Tucson. To have it more balanced, we need around 5,000 or 6,000 homes for sale. We're still in 3,000. So it's a little bit better than it was in 2021, but it's still more towards the sellers, leans towards the sellers. But you can see the months of supply have also gone up, which obviously correlates with the number of homes for sale going up as well. So more inventory, homes are going to sit a little longer. Buyers have a little bit more options. And just boots on the ground, anecdotally, it depends Depends on where the house is, what the condition of the house is, and the price point. If the house is in a popular area and it's in really good shape and priced, accurately, you can expect it to go very fast and have multiple offers. That said, I've experienced a lot of homes that were more on the outskirts, like Marana, Coronado, Tucson, Vail, things like that, where houses are sitting a little longer, Sarita, sitting a little longer, and maybe even having people put in lower offers and getting concessions still. So it's kind of a just hit and miss, depends on where you're at in the city. So let's dive into the sales price because all these are going to relate to that, right? So year over year, we're still up 3.9%. So we have not had any kind of devaluation here in Tucson. However, the prices have significantly slowed down on the increasing rate. So they're not increasing, nearly as high as they were. 3.9 is actually a little bit below like a 30-year average, because 30-year average on a real estate, you're wanting to get about 5 to 7% appreciation. That's like if you're on your investment, but 3.9 is on the little slow side because they have raised the rates and the market has slowed down, which is, again, to curb the inflation. That's what the Fed wanted. Just wanted to show you the line on that, but you can see as we came into 2023, it really just leveled off around the price. Sitting at an average of about 342, and right now 342.9 is the average price point for any houses or single residential in Tucson. Of course, single family is going to be a little different versus because that's including condos and trailers and everything else, and this is all residential. But that's the average price point what we're looking at. So that's the price, and then percent list price. Again, we've been sitting at 100% for a long time. It is a little bit lower. We'll show you the trend on that. It has dipped in the last couple months. So again, that's just kind of to speak to what I was telling you earlier, is it depends on the house. Some houses are still going for over asking, but then we're getting some that are coming in under, depending on the location and the neighborhood and condition of the home, etc. And of course, price per square foot ties into sales price, and they correlate, pretty much parallel, pretty much leveling off at 207 a square foot. So that wraps up the stats for this. Just the big takeaway from this overall is the market is kind of leveling off here in Tucson. We're not looking at huge price jumps like we have been in the past. We are sitting at 3.9% appreciation right now, and the price has been level for the last 3 months. So, what's coming up? The word on the street is interest rates are supposed to be going down at some point, hopefully by the end of the year, and we're going to continue to accumulate and get more listings on the market and more inventory available. So what that means is if and when the rates drop below 6, we're expecting a big boom in total business and total home sales. So the total homes sold and closed will jump up once that rate comes down, and that's up to the Fed. And the word on the street is after Christmas, but no one has a crystal ball. But if you have any questions on the market or anything about moving or real estate, please feel free to reach out to me. My number is in the comments below or on my channel here. And thank you for watching. Be sure to like this video, subscribe to our channel so you get updated on all of the updates coming out. And have a great day. Talk to you soon.